something to mind, or we could just chill. Ayy, just chill. Ayy, yeah.
Intruder alert. Intruder alert.
Hi, I'm Roy Murphy, you're watching the BitConnect YouTube channel. Coming up in today's video, BitConnect's trading bot revealed. Hello everyone, I'm Roy Murphy, welcome back to the BitConnect YouTube channel. Today we are talking about the BitConnect trading bot, where it is, how it works, what it does, all of those intricate things we will be covering in this video. Now, talking of videos, we've looked in depth at BitConnect's financial system before. We did a video called How BitConnect Can Afford to Pay Out. Now, if you haven't seen it already, I really urge you to go and watch the video. It's quite revealing. We will stick the link to that video in the comments box below. We've been looking at fiat currency as well in our first market news video entitled The Death of the Dollar. Again, to give you some perspective on everything we're going to talk about today, I also urge you to go and have a look at that. That will also be in the links below this video as well. So when you see in the news about how Bitcoin is in a bubble, now the bubble's going to burst, and they're all referencing, you know, this flawed judgment based on a limited knowledge of how an index system works. So in fiat currency, a debt-based inflationary system, it has many trading facets that commit, control and smooth out all of the things, which is this wonderful thing that we see over here, which is volatility. Now this is the coin market capitalization page. You can see every single altcoin, everything, Bitcoin to Bitcash to BitConnect. You will see on a daily basis down 3.86%, up 1.86%. Scroll down, you'll see some minus 10%. This is true volatility. And what does that represent? What does that mean? What does the price of Bitcoin mean? It's at 5,850 today. It has a market cap of $97 billion. Now, put that into perspective. $97 billion is the M1 money supply for the whole of the United Kingdom. Every physical amount of money, coins, banknotes, promissory notes that are existent, liquid, fungible cash for 75 million people in England, Northern Ireland, Wales and Scotland. Imagine, Bitcoin now has a market capitalization equal to all the money that exists in one of the biggest financial systems of the world. So we're not talking Mickey Mouse, we're not going back to 2009, 2010, you know, what's Bitcoin and all of the scare stories that happened in 2011 and 12 and 13, and all of the, what would Trump call it, fake news. All of the fake news that's in the system now has been derived from the market capitalizations and the history of people being scared, and it's the misunderstanding, it's the not understanding certain elements of the system why people are so vociferous, especially on YouTube. Now, we've been really lucky on our YouTube channel. We have some great people, we have a great community. I've got a great team that we've built up slowly over time. That team and that community are a little bit more savvy and they want to know more information. There's lots and lots of information on YouTube where people go through the motions and this is the system and you click this button and look how much money I've made today and you can do it too and click my referral link and everything will be fine. People are sick and tired of that. They want information. We don't make these videos every single day for the sake of making videos every single day. We believe in the system, not blindly, not because we're fanboys, not because we are, Bitcoin enthusiasts or BitConnect enthusiasts, or, we don't subscribe to any particular type of ethereal thoughts about what cryptocurrency should be. That kind of politics is one of the reasons why I left the Bitcoin development in 2011 anyway. So not a lot of you knew that that was part of my history. I used to work with the Bitcoin core many moons ago when it was in its early acceptance, and many of the reasons why I left was political, but it was for the right reasons. It's because of all the noises and all the crap that was in the system, where it started to become something and different people had different ideas about its use. And that's the reason why we have Bitcoin Cash today. That's the reason why there's going to be Bitcoin Gold soon in a couple of weeks. That's why there's Bitcoin Unlimited. That's why there are all these different forks, with SegWit, Bitcoin SegWit X2. These are all variations from different thoughts and ideas, different perceptions of how they think the system should work. This isn't a centralized system. This is people at least doing something. It may not be the right thing. They may all have different use cases. Bitcoin Cash has a different use case to Bitcoin. So you have to start thinking about things now in perspective within the bigger picture, and we need to go back a little bit to understand the big picture, where the history of money comes from, and why we have these perceptions that these things are bad. Why is volatility bad? Yeah, traders don't like it. It's great if you're a starter and you make 10% in one day and then you can come in and sell out. That's brilliant. That is giving sovereignty back to the people, to the common people who weren't ever allowed to trade. To trade at any index in the last 100 years, to be able to do that, you had to have a considerable amount of gold or assets or liquid wealth. It had to be in the millions for you to be one of those exclusive people who could trade stocks, who could trade, all these things. If we go back now, so if we look at the live orders, we're looking now at live prices, the ratios between Bitcoin and BitConnect in the live system. So you can see here on the selling orders on the right hand side, you've got the ask price, and on the buying orders on the left hand side, you've got the bid price. Now, everything seems to be on its head. And the reason why it looks like it's on its head is because most people want to buy low and sell high. That's the way the world works. People want to sell when it's at its highest and buy when it's low and make some money in the meantime, whether the markets go up or whether the markets go down. The bid price here is always tied heavily with the price of Bitcoin. Now, if you look at the graphs between Bitcoin and just the last 7 days trading, this figure here, look at the spikes and look at this arc here, it's almost completely emulated in BitConnect. And the reason why they're very, very so closely tied is because BitConnect shadows Bitcoin. Lots of the volatility and lots of the volume with Bitcoin is tied because the volatility and the trading in BitConnect with BitConnect. So the reason why we've had 13.6 million in volume is because that is what's being traded in BitConnect privately on the BitConnect, or mainly 98% has been on the BitConnect platform. And the volatility is tied on the relationship and the market demand for both BitConnect and for Bitcoin. That's why they're so closely tied together, and you have to understand that when you're talking the difference between cryptocurrencies, tied currencies, crypto tokens, which are completely different, and fiat currencies, which is its own beast. And it's a beast that needs to be tamed. It's a beast that's going to kill itself. It's just a matter of time before everything goes away. So the ratio here, you can see that the ratios between BitConnect and Bitcoin. Now this is the Bitcoin ratio between BitConnect, 0.33700020, and the trades underneath it are lower and lower and lower. So it looks on face value that the first trade is actually the highest, and why would you want to buy high? The difference between the ratio is an inverse proportionality. So the higher the volatility that this goes, the volatility is created by this going and the cheaper one coming into fruition and going up because it has the least range, it has the least buying power ratio between BitConnect and Bitcoin, and the volatility of this disappearing and this one moving up to the next one means that the lower trades, the more hedging trades will go up the system. Now let's say, for instance, not many people know this, when you sell Bitcoin for BitConnect, so if you're buying, you are buying BitConnect with Bitcoin. So the ratio that you would want to sell, if you sold one BitConnect coin here at this price, it's not just your trade, because this is the trade that's being offered. All of the other people that have traded will be added to this amount. This will be purchased at this price at this trade, and when that trade price for the total amount of BitConnect coins that are available, it will disappear and then be put into your BitConnect calculator wallet, your BitConnect wallet, and the same vice versa over here. So velocity of all of these disappearing, these all move up. There are pages and pages and pages, and this will always go up in value and this will always go down in value as you descend down through the list. So the ratios, the difference between this figure and this figure over here, and if you stared at this all day and you were mathematically minded, you could see the void between this figure and this figure, which changes throughout the day, and that is a really good predictor of how the day's performance will transpire over a course of 24 hours. It doesn't always happen like that because there are market events that could change it, but it gives you a really good indicator, and we can look at some of those indicators in a minute. So let's get rid of the Marco cap and let's get rid of this. Now let's look at these bubbles that we keep looking at. So we're told all the time Bitcoin is in a bubble. Yeah, Bitcoin, look at that, look at it all drops and goes up and goes up and goes up, and then it drops and it goes up and up and up. You notice the trend, it's always going up, and it hasn't always gone up. Look at this big void over here from June 2014 till the early part of 2016. That is because of another perceived bubble. Now it wasn't a bubble, there was a market reaction to something that very, very seriously happened at the end of this big uptick here. Now if you look at this big swipe, this big mountain here, people look at that and say it's a bubble, it can't be maintained, it's not real, everything's going to crash, everyone's going to lose their money. The short answer is no. It will go up, it will go down, it is volatile, but let's zero in on what happened in 2014. Let's zoom in to this area here, and you can see if you make this canonical and you look at the same figure, it looks very similar to what we're seeing now, but it's logarithmic in scale. So this massive bubble, when you got to here, this is where we had the equivalent of a stock market crash, and it crashed for outside reasons that weren't anything to do with BitConnect and its volatility, availability. It dropped because lots of people lost access to their money. Now when the whole Mt. Gox fiasco happened, there were hundreds of thousands of people with billions and billions of dollars worth of stuff in their online wallets with Mt. Gox. When Mt. Gox went pop because of really bad practices, allegedly they had lots of their wallet tokens stolen and transferred. Now where I keep a lot of my Bitcoin is in blockchain. Now blockchain.info, it's actually based in Luxembourg, but it's a lot of the funding money has come from Richard Branson. My TV's about to go off, so I need to push some buttons. What we need to do is figure out the reasons why this could happen. So the reason why this was a market reaction to something that happened with something that should never happen. Exchanges now are going more decentralized. They're not owned by a company. They're not supposed to be infallible anymore. By having exchanges going to the blockchain is the security for your holdings. So this is the reason why we had this big drop down here and then a little recovery, and then slowly over time it got eaten away. Now in the news and in the media, they absolutely love this as a story, and it's like, yeah, we told you it was a bubble and it was always going to crash. And there was everything in the media for such a long time was dedicated around the dark web and prostitution and drug money and everything. So this is a massive consolidation period, and I think we're entering into a bit of a consolidation period now where everything adjusts, and we'll see why that adjusts in a moment. But when we compare figures like this with the amount of trending, people aren't used to that when they look at normal trading. So if we look at the dollar index, for instance, let's refresh this, let's go to the 5-day. Let's do a 5-day dollar index. Now it's refreshed, let's go to 5-day. So let's think about the dollar if this ever decides to load. My internet's gone a bit funny today. We're having lots of winds here in the UK. Remnants from hurricanes that you guys in America sent us, thank you very much. So look at this, this is 5 days. This is volatility in a very small area. If you look at this difference between 94 points and 93 points, it went down to, what was it, 93.07 at its lowest over the last 5 days. When you think of that in percentage terms, over 5 days it hasn't traded up or down more than 0.6%, whereas Bitcoin has gone up and down 10 times that today. So that's the difference in volatility. If you look at what the US dollar, as an example, as it is probably the biggest world reserve currency for how long? I doubt it that much longer. But think about what is tied to this one thing, this one entity, this US dollar. Think about it. There's gold, there's silver, there's precious metals, you've got stocks, you've got bonds, there's central bank notes, you've got the velocity of money that's in circulation, you've got interest rates, oil prices, you've got futures markets, you've got derivatives, treasuries, you've got a country's GDP, you've got federal reserves, you've got federal rates, you've got debt levies, you've got the M1 and M2 money supply, you've got federal spending, you've got money creation rates, you've got business assets, household spending, you've got industry, you've got trade, you've got tax revenues, you've got income, and probably the most important would be market confidence. Market confidence is the confidence that people have in trading these markets based on what they think those markets are doing. It's humans being predictive, it's a human element, and because humans are inherently greedy, it's the hedging and betting on a very, very stable system, which is why we get these very narrow peaks and troughs. But we don't get that. If we look at a system, this is 24 hours in Bitcoin. So you can see, now there are only $3.2 trillion of M1 money supply in existence in America. But it's in $20.4 trillion worth of debt. So that's a gross debt to GDP ratio of 105.5%. So there isn't enough liquidity in the US dollar system to ever pay out any of the debt. Now the system of creating money out of thin air to control markets and dollar value is insane, and it cannot last. It's mathematically impossible. But people look at figures like this and they say that this is not sustainable, this is a bubble, but it's not. Now, if you look at Bitcoin, so this is Bitcoin. This is the trading for 24 hours. Now if you look at Bitcoin, Bitcoin is a deflationary currency. It's a store of value, and it is a ledger, and it's a central bank, and it's autonomously running on the most powerfully encrypted decentralized network in the world. It's an asset class of its own. It doesn't require any fiat currency whatsoever to have value. So like gold, you can mine it. It's effectively, you can actually be part of that minting process. That process, it's a fixed decreasing rate, so the value will always representatively go up. So what else gives it value? I mean, look at these peaks and troughs. What are giving all of these values, these big peaks, these big troughs, these, this selling volatility throughout the day. Now this is a trader's worst nightmare unless you're on the right side of the trade. Traders aren't used to this, so this is alien. This is a bubble to them. This is stuff that conventional financial theory. I mean, if you've ever studied Austrian finance methodologies, this completely goes against it, because those methodologies were based on the things that we were taught were what the dollar and the pound and the yen were supposed to be, and it just isn't so. So what else gives it value? It's just one thing, it's the direct market. This is a true representation of the market. Nothing else, that's it. It's supply and demand. It's a very, very simple system. So you still have hedging and betting and hoarding and splurging, but that's part of the trading system anyway in general. So it's money, it's currency, it's an asset, it's tangible, it's fungible, it's tradable, and this is trading on the system. So how would the bot, this mysterious, elusive bot that people keep talking about and keep trying to find, how would that work in this system? Now, what I've done here is I've got my RSI classes up here. Now this RSI class is an indicator, and if I go down to the indicators here, you can see that the RSI is the relative strength index. So the reason why I brought this up, the RSI is more indicative of what the markets are about to do. This is something that anyone that's ever used any kind of even $10 FX trading platform will know that it has RSI generators. And what this does, it's a predictive algorithm that works out the money supply within the system relative to the volume and the demands and the price. So when you see here, you've got the RSI, it starts to dip. So this is a sign of oversupply. And then when we get to undersupply, the market rises up. And this is an indicator. When it gets past this level here, the 80% or the 70% mark, and anything below 30, when it gets above that mark, it is always indicative of a rise. The demand is there. When we go back to the trading platform on the left hand side and the right hand side, where we're looking at buying and trading and selling in BitConnect, that system also works with Bitcoin, and it works throughout the system. So as there is more demand, those lower values become higher. They become, people start buying at higher rates, so the value goes up, and you can see it's emulated here. So this is how this system works. The bot trading and the trading in general works on supply and demand. It's a really, really simple system. There's nothing technical about it. Most people think that trading bot is, they think it's some ethereal robot. What is the trading bot? Well, let me first tell you what it isn't. Now, as a programmer someone who's worked with financial systems, I've built FX systems, I've worked with massive companies, big banks, big financial institutions, I've done spread betting, trading, so I understand the systems, but I also understand cryptocurrencies. I understand cryptocurrencies because I've been in it since the very beginning. I've run my own blockchain, I've supported blockchain, I've worked with BitGo, I've worked as a developer on Bitcoin. I've made my own cryptocurrencies, I've made my own wallets, I've made my own ledgers, so I understand the system, how it works in depth, and I've done some digging into the BitConnect system. So the BitConnect system, what isn't it? Well, it's not any kind of artificial intelligence, it's nothing that complex, and it doesn't need to be. All it needs is to know a few rules as to what to do when this happens here and this happens here. Now, let's talk about how the trading itself actually works. So if you were predicting a rise here, then you would keep some of your Bitcoin assets, bearing in mind that when the bot trades, it doesn't trade BitConnect, it trades the Bitcoin that you give it at the beginning. It's the only way out is either moving your BitConnect coins into a different Qt wallet or a different exchange, or you move it back into Bitcoin. So the only way in the only way in is via Bitcoin, and that asset is held and traded every single day. Thank you, Cryptoranium, commenting on the channel. Well, we got a new video. We're in the middle of making a new one, so if you find this one, you're welcome, and I will speak to you online soon. Welcome to the channel. So looking at the volatility. So if you had, let's say you had an asset class of 1,000 Bitcoins. Now it's a lot more than that, but we're just going to use 1,000 as a representative index. If you were going to see this uptrend here, you would stake, based on the staking weight of that rise, a percentage based on the fact that you think it is indicating, the market is indicating that it is going to go up. So what you will do, depending on the weight, the risk value, so say the risk value was valued unlogarithmically, say 1 to 10. If it said the risk value was only 2, it would bet, say, 40% of all of its assets to buy at this price here. And then who knows what happens. So it readjusts to the market when it comes here. Now it may have made a 5% swing here. So you don't get the 5% swing, you get roughly a third of that. And I've already done a video of to how the Bitcoin volatility software functions are representative on the actual trades that the bot makes in relation to the amount of interest that you gain within the BitConnect platform. It is logarithmic, it's not a fixed value, and we've dug into that before, so please find these other videos. If you like these videos so far, don't forget you need to subscribe. We don't make videos for the sake of it, we give you all the knowledge so you are better informed, to give you better insights, to use the system better. Everybody should be able to do really well through this system. And we give you the answers to all of your questions. So if you've got any questions, stick them in the comments box below, please. So this isn't a market trader doing these bot transactions every day. Okay, so we know what it isn't. It is not an FX trading type system, and we know it's not an off-the-shelf trading system. What is the bot? How does the bot work? So it's a representative bot trading on the peaks and troughs of the RSI indicators. It's very, very simple. So I'll tell you what it is. The bot is an open source Telnet C++ client API. Now that probably to most of you doesn't mean a thing. What it is, it's a very, very small script. It is an IP address that accepts and receives communication between only one channel. That would be the trading channel, and the valuation channel, the Explorer, which gives you the live details for Bitcoin. That is all it is. It's so simple. All it does, it has preset credentials that tell it the percentages to bet, to sell, to trade in bull markets and in bear markets, and that's it. It's a very, very simple system. Now I've checked out the system. What I will not do is give directions on what it is and why it is and how it works, because that would be a security issue. But what I can tell you is stuff that you can find out yourself. Now, I invite you to go and find this information. It is all public knowledge. If you are a coder and you understand the system, you can find that by going to the GitHub repository for BitConnect. If you know your C code, you know your C++, and you can work out you dive deep into all of the folders, and you actually read and extrapolate all of that information, you will figure out, because it's there in plain sight. So the execution code for the BitConnect trading bot is written in Python. I will give you that. It resides on at least 15 or more networked Linux servers around the world. It's not a decentralized system, it's a central system, and it's central for a reason, and that reason is because of security. And it's proprietary software, so this isn't stuff that you should know. So it is proprietary software written in-house. Now the script is only 11 megabytes in size. The whole bot is 11 megabytes. It's a relatively small script, okay, that controls these trading algorithms. That's it. And it's on a very large servers, and all those servers do is they have the database server, which uses a centralized blockchain for storing on a trading ledger. Now this is a centralized blockchain. This isn't a decentralized blockchain, because it's a central system and it has to be locked down. People don't know, aren't going to want to know, or lots of people would love to know the trades that the bot is about to make. And those bots, the trades that the bots themselves make, are public knowledge on the Bitcoin ledger, because the addresses are there. You can tie them to accounts If you're clever enough, you can go to the accounts, they're there on the blockchain. If you dig into those under the crypto IDs and you see their transaction IDs, you can see their wallet IDs, and you can see the amounts of BitConnect coins that are in there, and you can also see who they belong to by the fact that they are the top 20 richest list of all the people that own everything within the system. So it's very evident who the BitConnect system and the bot is trading for. So that is, again, if you dig into it, it is public knowledge. So we know that it's stored as a trading ledger. This can be found in the code base on GitHub. If you run a full client node, you will find all the transactions and all the IP addresses from the bot. So it's not something I can just show you, because it takes a big infrastructure of servers to be able to actually run a client telnet server. It's going to be a full node. So if you have all that system, if you're a developer, you've probably done this already. I've already done this already. So I imagine there's hundreds of people, big developers around the world have probably played around with it. It's actually not that important. The fact that it works is important. The fact that the system can sustain itself is important. So I think that's one of the most important things. So, I mean, it uses floating IP addresses, so the servers are encrypted on the network. I could give you an IP address and it would change in 10 minutes anyway, so there's no point. You can't ping it. The servers are mirrored in co-locations around the world, and it has its own explorer. So it has this explorer, so if you run a full client, you will find out all the real-time addresses. So they are actually off the grid. The transactions between the databases are off grid. You can't ping them. There's no IP address you can get to. Okay, they use an internal network of databases tied to a local IP address, an internal network, so it cannot be snooped by anyone on the internet. So when I say that, it receives a response, it's the right encryption, and then it just pings the database with the live market data, and then it responds accordingly, making a trade, making a buy order or a sell order. So that is how the bot works. That is your trading bot. Okay, I don't know if that simplified it for you or made it even more difficult, but if you run a full client, you will see everything you need to know and nothing that you shouldn't. It is proprietary software, remember that. These are all the scripts, all the algorithms. If you went to your bank and said, you know what, I bank with you and I think you should send me the scripts, your trading scripts for your bank, your proprietary software, can you show that to me? And they're going to tell you where to go. They're going to say, no, it's a security issue. I've worked on these systems, I know, and that's only because of the industry that I work in, because I've worked in fintech for such a long time, because I'm an enterprise architect. I deal with this all of the time. I've worked with big banks, and you obviously have to be security vetted and you have to have the highest authority to be able to work on these systems. Even though this is a centralized system, you have to be able to understand that this is a security issue. So there are other things we will be talking about. We will be talking about the actual transaction IDs of some of the bot trades. So we will dig into that at another time. But they do exist. That's a little bit of insight, so hopefully that gives you some more knowledge, some more insights about the trading bot itself. But I really hope you liked this video and it wasn't too long for you. Don't forget, all of those videos and the links to other videos that are in relation to this topic are in the comments box below. Don't forget to like and subscribe. I'm Roy Murphy, you've been watching the BitConnect YouTube channel, and I will see you in the next video.
This video was brought to you by Team Smurf. We bring you new videos each and every day. To join our team, click the referral link below this video. Don't forget to like and subscribe, and interact with us in the comments box below. BitConnect, creating wealth for everyone.
Just wrong, baby, so gone, baby. Tryna get it on, ladies. So say yeah, so say yeah. It's just wrong, baby. I'm so gone, baby. I'm tryna get it on, ladies. So say yeah, so say yeah.